Hi, this is Willie Vo with the Farm Progress Virtual Experience, and today I'm talking with Jessica Williamson, who's a hay and forage specialist with AGCO. Jessica, tell me a little bit about yourself and your background.
Sure. Well, thank you for having me today, Willie. I grew up on a farm in Western Maryland where we have a cow-calf operation. I earned my bachelor's degree in animal science from Morehead State University. I went on to the University of Arkansas for my master's program where I earned my MS in ruminant nutrition, and then I completed my PhD in forage agronomy at the University of Kentucky. So I have kind of a hybrid agronomy, ruminant nutrition, animal science background. Most recently, I was employed by Penn State University as their extension forage crop specialist before joining AGCO back in April.
What made you make the switch to AGCO?
Well, Heston has really always been a leader in hay and forage equipment, developing industry firsts, including the first self-propelled windrower, the first large round baler, and the first large square baler. And joining that legacy of innovation really appealed to me as someone who grew up trying to feed our cows the best forage we really could. I enjoy working with farmers first and foremost, and that's really why I got into this business in the first place. And this position allows me to work directly with AGCO customers as well as the dealers. We're conducting field trials and research solutions for the different challenges that those farmers, the customers, face. And I'm here to complement what the engineers and product specialists are doing within the AGCO company as we learn the best techniques for producing the best high quality forage. So, part of my job is to do research on hay equipment, on AGCO hay machines. And really we're focused on maximizing forage quality primarily, learning how different harvesting processes and practices impact the quality of different types of forages under different environmental conditions. Most recently this year, we're doing trials that include the new ProTech round baler, which is a silage baler and wrapper all in one. So as soon as that bale is baled, it can immediately be wrapped while the baler is intaking more forage in the field. So that really cuts down on that the operator's time and the producer's time by wrapping that bale immediately as soon as it is baled. And what we're looking at in this field trial is things such as the time of wrapping after baling. How does letting that bale sit before it's wrapped affect the forage quality? How does the time of wrapping or the time between baling and wrapping affect that forage quality? Next year, we're planning to see how various conditioners affect dry down rate and forage quality. AGCO makes a variety of different conditioners, and we're conducting a field trial to help guide customers in choosing the correct one for their operation.
Well, Jessica, thanks very much for your insight. Good luck with your global job. This is Willie Vogt with the
Thank
Farm
you.
Progress Virtual Experience.
Hi, everyone, and welcome to the Farm Progress Virtual Experience breakout session, Livestock Marketing in the Wake of COVID-19. I'm Mindy Ward, your host, editor at Missouri Ruralist. Joining me today is Dr. Scott Brown, University of Missouri ag economist, who specializes in tracking trends in both the livestock as well as the dairy industry. But Scott grew up on a cattle operation here in the Show Me state, and so giving producers a little insight into their marketing plans is something that he holds near and dear to his heart. Scott also authors the Beef Outlook for Farm Progress, which is a monthly column that you can find either online or in print. Now, Scott, we couldn't have this be just a Missouri-only panel, so we reached over to our neighbors to the east and invited Illinois cattle producer Mike Martz to join us. Mike runs a feed yard operation with his family. He's a partner in Larson Farms. So, Mike, if there's anybody I think who has had the pulse of producers on their mind the whole entire time, and what they're thinking when it comes to cow-calf producers, or those who are trying to get their cattle into your feed yards, or even trying to get shackle space in the harvesting facilities, I think that's you. So I'm looking forward to hearing what you have to say. So gentlemen, as we begin this session, I'm going to share my screen and we will kick things off with Scott.
So thanks very much, Mindy. It's great to visit with everyone today. And I will say, who would have thought we would be talking about the kind of cattle market outlook that we are today if we would have rewound to the start of 2020 and what we thought was going to be a better year for cattle prices. And then many of the ideas that we thought were going to play true in 2020 were derailed as we talked about the impacts of COVID-19. I always like to remind us we're far from done with COVID-19 effects. And even if we were to get beyond the worst of the outbreak of COVID-19, I think some of the general economic factors will continue to carry with us. If you'll go to the next slide, just kind of my big picture, if you will. And again, we just can't avoid discussion about COVID-19 as much as I might like. I think we're months away from recovery. There's a lot of uncertainty, and I remind us that uncertainty comes with risk for us, even in cattle markets. As we've seen plants that have come back online and slaughtering back to more normal levels of cattle numbers on a daily basis. But an outbreak in another cattle processing plant could certainly spell problems for us. I switched to the demand side because I kind of feel like demand is going to be the important piece of this in terms of the next step, and stimulus monies matter. We've seen stimulus monies help keep the economy going, maybe stronger than otherwise would be the case. We now know we're trying to find maybe that fourth round of stimulus package that folks can agree on in Washington, D.C., and we've yet to do that. But ultimately that could affect demand for beef and could hurt us in terms of cattle prices if we don't find some additional stimulus at some point. It reminds me costs are exploded or increased as we talk about getting from farm to retail, and we'll look at a few slides related to that. I, though, don't want to forget that for me, the positive part of this is what's the longer term cattle and beef supply situation. And frankly, we're in much better shape in the cattle industry than many of the other livestock industries, where I worry that supplies are still trying to grow too fast. And for me, the bright spot could always be exports as we look into 2021. So the next slide, we're going to look at just kind of where we sit in terms of what's happened. And box beef price on the left side, fed steer price next, feeder steer price, and then ultimately beef production. I've kind of split these into, blue bars are pre-COVID effects, February, March, kind of mid-March in terms of where we split, immediate aftermath of COVID-19 from mid-March till about the end of May. And then since June, what's been happening in these markets. The one that sticks out and the one that has everyone's attention is just how high box beef prices went. They have come back down and frankly, since June have been slightly below year ago levels at $2.19. On the fed steer side, we had much lower fed cattle prices right after COVID-19 really broke at $1.08. They've continued to be below, running about $1.01 for cow-calf producers. We actually have seen a little bit of recovery in feeder cattle prices since the worst of the outbreak. Yet beef production, down really hard as we had processing capacity limited in that immediate aftermath. But since then, we've actually grown 2.3%, and we're sure trying to work hard to get the backlog of cattle to slaughter and get back on track. So next slide. Just to remind us some of the immediate COVID-19 effects. So this is foot traffic in the United States to supermarkets, the blue line being 2020. You see the spike there in mid-March as we had consumers make a run on supermarkets, trying to stock shelves like, I was going to say never before, but certainly hadn't happened for a long time in terms of that kind of stocking activity. Once they felt like they were stocked up and equipped to handle a longer run issue, we did see that supermarket foot traffic head back down in 2020. As we were opening up, many parts of the economy, we saw that foot traffic in stores continue to increase until we got pretty close back to an index of 1 in early July. And we've kind of trailed off since then as we've seen increases in COVID-19 cases in many parts of the country. The next slide that I have in the deck here shows the other side of this, and I think it's important for beef and cattle in particular. We'll go one more back, if you will, Mindy. It's the one that shows sit-down restaurant traffic, and you see when we shut down restaurant traffic, we were kind of year-ago levels for the beginning of 2020, and all of a sudden we're sitting at 40% at best, and nice recovery as we went through June and early July. And if you heard me talk back in late June, I would have said I'm looking forward to continued positives as we continue to open and get more restaurant traffic happening. And then of course more cases came and we've really flattened that off. I'm really curious to see what happens as we finish the rest of the year. But I think getting restaurant traffic back is really critical for what the demand side of the beef industry might face. So next slide. I guess as an economist, I always have to be somewhat pessimistic, and this is the slide for me that continues to concern me about the just economic downturn that we have going on. So it says U.S. real GDP, but think of about income in our pockets. If you look at the line, and I'll remind us just to go back to 2008, 2009 with that Great Recession, and you see the downturn there pales in comparison to what we're going through in 2020. It really is going to take us 2022 or so before we get back to income levels that we would have seen in 2019, and even longer to talk about getting back to the growth rate that we would have anticipated in the absence of COVID-19. So there could be a longer economy, a longer drag. What that means for beef demand, I do have some concerns, and I guess that's just, for me, one of the downside risks that we'll have to deal with. So next slide. I continue to make sure that we point out that COVID-19 has increased costs getting products from farm to consumers. You know, we immediately might jump to the processing side of this equation, but I go, it's more than that. It's transportation, it's retailing. Anything that we've done as we've dealt with COVID-19 has made consumer prices go higher. And this is CPI for food off the right-hand side of this graphic. So you see that 4 to 5% growth in that overall CPI for food relative to a year ago. Yet prices received by farmers have been down for much of the year. We're going to read that one off the left-hand axis. And if you exclude that very early part of 2020, then all of a sudden you see there's a really good correlation between farm prices and consumer prices, but we lost that correlation. And I worry that those added costs don't go away too quickly. I think they'll begin to moderate some, but that could mean less positive news at the farm level, as I think many of those costs get pushed back in terms of potentially lower prices to farmers. So next slide. So to talk about the supply side here for just a minute, a lot of discussion about drought, a lot of discussion about weather. Sometimes it hasn't been drought related in some parts of this country, but we have seen expanding drought areas primarily in the western part of the U.S., but we've seen some things in Iowa of late where there's a pretty good spot of dry weather, especially in southwest portions of Iowa. So in some cattle portions, you know, we started this year with only about 13% in a D1 or worse drought classification. We're now sitting 39%. I guess I don't expect that to mean a lot of liquidation of cows, but I think it certainly puts a damper on any kind of expansion that might have been thought about going on in many of those western states. So I think that keeps a lid on any big expansion in cow numbers. If we go to the next slide. We are dealing with what's been a return of on-feed inventories in feed yards back to where we were pre, and the last cattle on feed report we got certainly was larger than expectations pre-report. And so as you look back in April and May, and we did place a lot of cattle, we're getting those cattle back in feed yards. It's not surprising to see us back to where we were. So we got some short-term issues, I guess, in terms of just cattle we have to deal with. But I remind us as we go to the next slide, I believe, well, we're going to look at a couple here on weights first. So weights have at least started to come back closer to year ago levels. When we think about ultimately beef production, it's a combination of slaughter and weights that matter. So it's good to maybe see as we're getting a little more caught up in terms of weights relative to year ago levels. Next slide. And again, just back to, if you look at beef cows, down 0.8% in July relative to a year earlier level, it just reminds me to keep saying supply side in better shape. I don't think we expand beef cows maybe anytime too quickly. At the same time, only an 0.8% decline probably means we're fairly flat in terms of beef production for the next couple of years. So I wouldn't expect a big downturn, but much better than some of the growth rates I expect to see in some of the other commodities like dairy and pork. I think if you add supplies on top of the demand uncertainty, you get a little more concerned about prices going forward. So next slide. This margin is going to be important. We've talked about it already in terms of how wide we get from farm to wholesale level. As you look at 2020 monthly data, July came back a lot closer to where we were a year ago. I know there's plenty of concern in the cattle industry about margins from farm to wholesale and cattle pricing generally. I'm going to avoid that discussion today, but I think that will continue to be some of what will be the conversation as we look ahead for the next several months about price discovery, especially in fed cattle markets. To me, this slide just again reminds me to say, I worry about COVID-19 costs and what it means to the spread from farm to wholesale. Next slide. Exports could be really important as we get into 2021, and for me could frankly be the bright spot, and for a number of countries. And you know, it seems like the U.S.-Japan agreement that we saw come into effect in early 2020 was years ago at this point, given everything that we've dealt with in the industry. Yet I remind us that the reduction in tariffs on U.S. beef headed to Japan are certainly going to be helpful to us. I think one of the problems that we have seen is with the COVID-19 outbreak and sometimes in other countries, we saw the dollar actually strengthen substantially, which hurt us in terms of being able to export products to a number of countries. You'll notice that that dollar has been weakening, and we finally have here in week 33 of 2020 gotten back to where we were in 2019. So we've seen some weakening back after the initial run up. So I think maybe exchange rates are in a better position for us as we head into 2021. If we go to the next slide. So just monthly exports of U.S. beef and veal, and you see both May and June numbers that we have on that graph are well below where we were in 2019. To me, that was part of the issue with just, again, higher exchange rates, as well as those countries like Japan, South Korea, maybe to a certain extent China, dealing with COVID-19 as well. As those economies recover, I think there's just an opportunity for some growth in beef exports as we go into 2021. Next slide. I always like to remind us, you know, what's USDA and USDA WASDE. So USDA gives us a monthly projection of prices. So if you look at the left side of this graph, May of 2019, what was USDA saying about fed cattle prices for 2020 back in May of 2019? And they would have said, hey, we're going to have about $1.20 fed cattle prices in 2020. You see, even going into February, they were still talking $1.17 or so for fed cattle prices for the year. And with the outbreak of COVID-19, we quickly went from $1.17, or USDA quickly went from $1.17 to $1.04, as these markets were so volatile, moving so much lower. USDA, the last three reports now have been plus or minus $1.08. So certainly a lot less optimism. I use this slide again to remind us that, again, as we start thinking about 2021, I could see some higher prices for 2021 relative to 2020, but there is this downside risk that continues to be something I think producers are going to want to pay attention to. Last slide for me, I believe. One more before the last one, I guess. How's that, Mindy? So 4 and 5 weight calf prices. So this hasn't been felt equally, I guess, as part of my point. We've had calf prices that have come back very close to where we've been year ago levels. Been sliding down a little bit of late, but we in fact have seen 2020 come back. And I just remind us, if we'd have been back in April and I would have said we're going to get feeder cattle prices back to where we were year ago levels, I think many people might have thought that was a stretch, yet we've seemed to have done it. We certainly haven't done it on the fed cattle side, but a nice change, and we'll see what happens for some of these calves as they try to get marketed this fall. Next slide. And we'll finish with this slide of what will be higher. All right, so number one, forecast for 2021. And I joke all the time, the thing I know with certainty about these lines for 2021 is they'll be wrong. Things are going to happen that we didn't anticipate. And so we'll see another roughly $4 higher annual average fed cattle prices, another roughly $8 higher, $5 to $5.50 pound feeder cattle prices in 2021. For me, that's again driven by not a lot of growth in supply, stronger exports, and hopefully demand that holds with us. And for me, demand is the biggest uncertainty as we get into 2021 and consumers begin to feel the real pinch in terms of economic activity. And so we'll just see what that means for beef demand. So I appreciate the few minutes here to talk about cattle outlook, Mindy.
Great. Thanks, Scott. Here's his contact information if you all want to jot that down really quickly. And while Scott gave us the big picture view, I believe it was Mike who was on the ground there. So he's one of those that has seen it and been through it and knows exactly what those projections do or do not do for his operation. So Mike, I'm going to turn the session over to you, and I have control of your slides.
All right, thank you. Thanks for having me. I guess my job here is just to tell the story that most cattlemen have gone through since COVID hit. First, I'll introduce myself. I'm a partner of Larson Farms Partnership. We were established in 1979, and we used the farm economist out of University of Illinois to write our partnership agreement, and it still stands today. We are located in Maple Park. We're 60 miles west of Chicago, right on the verge of a collar county, which is King County. We have 5 partners in the partnership, 3 generations. Out of those 5 partners, we have 4 that are active, and 1 is just an investor right now. Each day we have 3 generations working on the farm. Some days we have 4. My grandkids, the 8-year-old and 4-year-old, do a lot of the mowing around here. And my grandson, who's 10, he's in charge of fly control. So he puts out wasps that come in from Texas every Thursday, and he's in charge of keeping our fly population at a minimum. We have 4 full-time employees. One's been with us 42 years, one's been with us 33 years, 11 years, and one's just finishing his first year. In our partnership, each partner and each employee has some aspect of the farming operation they're in total control of. We have to answer to each other, but they have the decision-making ability. Today we have 3 different businesses. The crop side is Larson Grain Farms, the cattle side is Larson Farms Partnership, and the trucking side is Larson Trucking LLC. We are a custom feedlot. We have capacity for about 3,400 cattle. Deep pitted barns, and we have about 20 customers that we deal with. We have 6,500 acres of crops that we raise each year. Next slide, please. So some of the challenges I think that COVID has presented, I mean, the first thing I want to say is if we were talking here last year and somebody said, you know, there'll be something that comes along that'll bring this country to its knees, I think we all would have chuckled. And in my opinion, this COVID has sure done that. I never saw it coming. I never thought there was anything that could bring this country to its knees, but it sure has happened. The first thing I think the challenge we had was cattle marketing. We went 5 weeks with no bids, and I'm sure there's a number of cattlemen that face the same thing. All we saw is that show list every week getting bigger and bigger, the weights of the cattle going higher and higher, and wondered if they were going to be able to keep those plants or open those plants back up and keep COVID out of them. And I think after 5 weeks, we did get a bid, and it was $25 a hundred less than what we marketed 5 weeks ago, which was awful tough to take because we were 1,300 pound steer. He's going to bring $325 less. But to be honest with you, I was so grateful to get a bid that that was the first night I slept really well in about 5 weeks. And I think a lot of producers were like that because I was on the phone with a lot of them, and you know, there isn't a fork and knife big enough that we can eat them all. So we had to move them. The other thing that happened is our feed supply, at least for us, we had DGGs contracted for 3 months, and that ethanol plant shut down. So that cheap feed now is gone, and we had to hustle to find other sources of feed. The other thing is, once those cattle left, how we're going to keep this feed yard full, because we're a custom feedlot. We're a customer for ourselves, but we have 19 other customers we deal with. The shining light is we kept the lots full. We were been full all the time. Our customers came back. Some of them cut back a little bit. We filled the yard with backgrounder cattle that those people did not like the price they were being offered for their backgrounded cattle, and we took those cattle. On the farm stress, like I said, there was a lot of sleepless nights in that 5 weeks. I mean, some of the conversation, some of the thoughts is, what are we going to do if we've got to euthanize all these cattle? And that's tough. And I think how we got through that, or how I got through that, is I got about 3 really close friends that operate feedlots or cow-calf operations, and we probably talk to each other about 2 to 3 times a week, and that helped get us through that. I think there's a lot of comfort in numbers, and we're all going through it. And I think we came through it stronger than when we went into it. Came out of it stronger than we went into it. And I think the other thing the challenge we had was, what happens if we get COVID-19 on the farm? Employee goes down, all of us go down. What are we going to do? So we came up with a plan. I think it's good to talk about those things at our partnership meetings, because we make better decisions when we're not under stress. And probably a larger concern is how we're going to get the crops planted if it came down and hit the farm. And we've been fortunate that everybody's been safe and healthy, and so that's been a plus. But it still is a concern as this thing expands into more of these rural areas, that we stay safe. Next slide, please. The marketing 2020, we went into this, selling cattle probably for $1.28 in January. Things were looking good, and we figured this was going to be seasonal, and all of a sudden it hits and we dropped $25, and we definitely have lost our leverage. The packers got too many cattle to pick from. We're dealing with a lot of heavy cattle, heavy carcasses. We're producing a lot more meat per animal, and until we get that leverage back, we're going to suffer here a while. But we got to remember, back in 14, we probably had more leverage against the packer in 14 than we do today, than they have against us today when we were selling those cattle at $1.70. So, it's kind of changed, different times, but we'll get our leverage back. We've just got to work through all these cattle. And these heavier carcass weights are a problem. Last week, August 20, those steers average weight was 1365, 20 pounds more. The carcass weights were 28 pounds heavier. That's an issue. Higher percentage of prime cuts. That's great when we have the restaurant trade in these big cities, these high-end restaurants, but we're having, they're not open, or they're cutting back on the number of people that come in there. That's an issue. I saw last week ribeyes priced cheaper for prime cuts than we did choice cuts, and you don't see that very often. The liquidation of beef cows, like Dr. Brown said, there is some liquidation going on. We've harvested 50,000 more beef cows this year to date than we did last year. If that drought continues to speed up, I can see that that liquidation will continue, maybe ramp up a little bit. We have killed 2.6 more cows this year to date than we did last year. On the dairy side, they struggled for a long, long time. And now with the milk price going up and they're in some profitable levels, we've seen 99,000 less dairy cows that have been harvested. So they're keeping those back, but eventually they'll come to market. The harvest facility concerns, I have that every day. I still have it. And until we get this vaccine and we get over the hump, you better still be concerned about it. Because if a packing plant goes down in Texas, this probably doesn't have a lot of concern for us in Illinois. Vice versa, if one goes down in Illinois, they don't have that much concern in Texas. But anytime that we're not harvesting the full capacity of cattle, it's hurting us getting through this large glut of cattle that we've got. Now, September 1, just the other day, I see we harvested 120,000 head of cattle, which was great. I haven't seen that number in a long, long time. So I hope we can keep that up, but we still have to be concerned. These packers have done an excellent job of putting in the protocols to keep their people safe. And I get my hats off to those people because we're in the business together. We can't function with either one of us not being there, and we need each other. The restaurant limitations, we're seeing that where some of these restaurants are having to close back up, limited number of staff or people you can put in there. They've got staff trouble that the staff doesn't want to come in. And in these major cities with the disruptions we've had with some of the riots and protests, I think that hurts our high-end restaurants, and that's where a lot of that high choice and prime meat goes. The increased demand for freezer beef, I think we've seen that all across the country. These small packing plants where you can sell freezer beef directly to the consumer, I've seen that just explode back here in Illinois. I have one customer out east that's taken over 100 head back east and sold his freezer beef or to stores. And it's, he's one of those guys that here's a problem, and I'm gonna find the solution, and he definitely has. But some of the locker plants in my area, they're out 1 year until I get a slot to harvest any cattle. Next slide, please. Eyes on 2021. I feel like Scott here, so probably most of this will be wrong, huh, Scott? But anyway, I think anybody's plan, marketing plan, farm plan for the farm, you got to stick to your plan. And I don't think you've got to stick totally to it, but you should have a plan and make modifications. But it gives you kind of a roadmap of where you want to go. The other thing, I think the other thing is to know your cost. I know when I started here 40 years ago, we were running closeouts on cattle, and at the end of the year, the balance sheets didn't match. We didn't have as much money as what the closeout said we were, but we weren't covering all our costs. And I think it's very important because some of those costs can fall through the cracks. And when that happens, you see at the end of the year with the balance sheet, it doesn't match. Do not let problems overwhelm you. Look for opportunities. And I think that's a good example of the guy that's taking all those cattle back east. There was a definite problem, and he's taking them back. And I'm sure he's getting $200 to $250 more than what we're getting back here for these cattle going to as a group to the local plants. But the other side of it, I think that with the packers making the amount of money that they're making, all I'm seeing at these packing plants is new improvements. They're updating their facility, and a lot of these facilities are old. The rails were not designed to handle the size of cattle we're delivering today. And I think down the road, we'll get our leverage back, and we'll see these packers build more facilities. There'll be more opportunities for us. I'm pretty optimistic down the road. I just don't know how long it's going to be. The next one, lean on your contacts and information or relationships. I think that might be one of the most important things a person can do. You need to get involved with your commodity groups, Farm Bureau, local community groups, maybe a peer group. Lynn and I, my wife and I are in a peer group, and we've gotten a lot out of that peer group because you can open up about your farm and what's going on, and you'll get somebody that tells you just what they think. No sugarcoating it. So, and those contacts will help you get through tough times, but they're also a huge benefit for you for finding out information. And information is power. And the more you've got, the more you know what's going on in the industry, the more you can make better decisions. Reach out for more information. You might have to pay for some advice. And I think that might be the cheapest thing that you might pay for all year. And I don't think it shows a weakness that I'm asking for help. I think it's a strength. And, I lean to Cattle Facts for my cattle information. I lean for 2 commodity brokers that we use, other feedlot managers, and a bunch of university people. And that's where my information comes from. And I try to read a lot so I keep up to date, because we try to sell cattle every week. And when there's a week that I don't have any cattle that are for sale, I feel like I'm kind of out of the market. And I just think that you've got to stay on top of this. This isn't something that you can not sell cattle and then think you know what you're doing 5 weeks later. I think you've got to keep on track of what's going on a day-to-day basis. Stay current with your marketings. That's probably what we got into this hole when we had 800,000 to 1 million cattle that we didn't get marketed over that 11-week period when these packers were suffering so bad with COVID-19 in these plants. And overfed cattle, besides being costly in the feedlot, they can create other headaches where, there are too many fours on them, they're too heavy, and we've got an overabundance of fat in the market. And if we have to start rendering fat in these packing plants, it's just going to make those overfinished cattle worth less. We've been ultrasounding here at Larson Farms since 1996, and each animal goes through here, gets ultrasounded about 100 days before harvest. It sends a sound wave down through the animal at the 12th and 13th rib. We're looking at the back fat. We're looking at the marbling, the muscle score, and then we give it the weight of the animal. And then it comes back with what the optimum feeding time for each one of those animals are. So picture this is, we can't make this animal any better genetically, but we can sell that animal when she's as best or he's as best as he can be. And that's what we're trying to do. These kids just went back to school here in the last 10 days. Picture this, that the principal came down to that teacher's office and said, all right, I'm going to put first graders in here, I'm going to put sixth graders in here, and I'm going to put seniors in here. And at the end of the semester or at the end of the year, I want them all to be the same. You can't do it. And we can't do this on the cattle feeding. And that's why we use ultrasound. And I'll be honest with you, we couldn't feed cattle if we weren't ultrasounding them. I totally believe in it. It gives us 3 different marketing times, because we divide them into 3 marketing groups. So you spread your risk out a little bit that way. On an up market, you'll say it's no good. On a down market, you'll think it's the greatest. So look for more affordable feedstuffs. I think that there's a lot of opportunities. Cattle have the ability to take these marginal feeds and make them into great beef. And we purchased some damaged corn the other day for about half price. And I think the cattle will run that through and we'll be fine. The nutritionists looked at it. We don't know a lot about much. We hire a lot of good people to help us along the way. So next slide. Mindy, I guess that's my presentation. Thank you.
All right, here is his contact information if you want to jot that down. And so I'm going to unmute you all. I just have a couple of questions I wanted to run by you. The first one is going to be for Scott, and that is, you talked about higher prices in 2021, and I wondered, across the cattle industry, who is going to benefit from that? Will it be the cow-calf producers and the feeders? Would it be the fat cattle? Or where do you see that price uptick happening? Hopefully you say across the board.
So I do think it's a really good question. I think given where we're at, we have an opportunity for higher prices across the board. I think as we talk about maybe feeder cattle supplies tightening up just a little bit as we get into 2021, we might see calf producers in a little better shape. But I think across the board, we can talk about the potential for higher prices. I always just worry when you put those kind of point estimates out there, there's risk around those point estimates. And for me, there still remains more downside risk than upside risk. And so how you want to market relative to those thoughts, I think is important. If I hold going, we're going to see higher prices in 2021 because that's what Dr. Brown told us we were going to have, and then it doesn't happen. I think folks got what they paid for in terms of my forecast, but it hurts. And I want them to think about that downside risk protection. I think it's important as we don't know how long COVID-19 continues to put some pressure or downside risk in those prices.
Okay, great. Thank you. And then Mike, I know that you talked a lot about your harvest facility concerns and, being able to tap into those things. Can you tell individuals how long can you keep them at your place and be able to hold them there? And like you said, some people just came and got them and took them out east. What do you do with them? If you can't deliver them to a harvest facility, do you have multiple harvest facilities you choose from? Just give me a little bit of background on that.
We have multiple facilities. We sell the 3 packers pretty consistently. We have sent cattle here in the last year to Augusta, Georgia, which is a new packer that called up, and that's about relationships. I had a client that knew the plant manager down there, and he called me out of the blue and bought 3 loads of cattle sight unseen, sent them down there. So I think it's having your feelers out there, who's buying cattle, and make a lot of phone calls. And but I'll be honest with you, I hope we never have to go through that again, that we can't get these cattle moved in a timely fashion.
All right. Great. Thank you both. I appreciate it. Thanks for joining us, Dr. Brown, and thank you, Mike, for giving your insight and a little intel into what you can do possibly moving forward in marketing in 2021. Thank you all for joining us. This is not the only breakout session on Farm Progress Virtual Experience. Feel free to click around and see which one might suit your fancy. Have a great day.